This is a follow-up video to my live options trade on Euro Japanese yen that I made 2 weeks ago. I received so many questions about this particular trade, so I thought I want to make another video to show you the details, particularly the numbers behind the trade. So the trade that I made on this pair is what is called a bear call spread. Now, options trading is something that I'm fairly new to, and I don't have the time to explain in details how options trading works and what all the terminologies are. But this is the numbers, and I've tried my best to present these numbers in such a way that regular forex traders would be able to understand. So, what did I do for the trade? I had a bearish view on this particular pair based on my analysis. So I want to put on a position that would benefit if price actually falls. And I use the bear call spread to do it. I buy one out of the money call and I paid 5,310 yen for it. Then I sell one in the money call and I receive 40,600 yen for it. So after these two trades, I made profits. The net credit is just the difference between these two numbers, which worked out to be 35,190 yen, or translating that to pips, 351.9 pips, using my position size 10,000 units. So what did I risk going into the trade? Well, the risk is basically just the difference between the two strikes. So 135 to 129, that's 600 pips, which works out to be 60,000 yen, again using my position size of 10,000 units, minus the net credits that I have already received by entering these two positions. So take that, the risk on my trade is 24,810 yen. My maximum reward for this trade is obviously the net credit that I have already received. And my break-even point is the lower strike plus the net credit. So that works out to be 132.50. So go back to the chart. If price is above 135 at the end of the trading day, October the 13th of November, then this is how much I would lose, and that's fixed, set in stone. On the other hand, if price is below 129, so this level here, at expiration on the 13th of November, then I get to keep all of my credits, that much there. My break even is 132.50 right here. So if price is above this, then I would stand to lose a tiny amount. And of course, if it's above 135, then I would lose the maximum amount. If price is below this level, then I would stand to gain a tiny amount as well. And if it's below 129, then I get my full net credits for it. One of the things that I really liked about options trading is the fact that what price is doing between when you put on a trade and expiration has no impact on your positions. By what I mean is that you cannot get stopped out of a position. There is no stop loss. You don't have to set a stop loss. Say, if I was to trade this conventionally using standard stops and targets, so Friday the 13th, that's where I made a trade. If I was bearish on this trade and I have entered, for me the most logical position to put my stop would have been above the previous swing high, because I'm anticipating this pair to go lower. Had I put my stop there, I would have been taken out not too long ago. So I won't be in the position anymore, and now price is beginning to move in my favor. So this is what would have happened if I have been trading this using normal forex trade. However, with options, like I've mentioned, there is no stop loss. You cannot get spiked out from news for anything like that. All it counts is where price is at expiration. That's all it matters. Between where you've entered and expiration, it can go 1,000 pips against you and you still would be in the trade if you set it up correctly. So the way that I've set it up, I've used a combination of two of these positions, which means that I go in with a max loss and a max profit already predetermined regardless of what's happened. So let's look at the position right now. So this is Saxo Trader 2. I'm trading through Saxo Capital Markets. So this is the long call here, 5310 yen, that's what I paid. It's now a loss, but the short call, it's making money. So overall the position is making money, and with 2 more weeks to go, I've got no plans to manage this position at all because price action is beginning to turn in my favor. Just to show you what I mean by receiving and paying for credits. So I started an account with that much. This is what I paid. Where is the other list? This is what I paid in British pound for the out of the money call. 5310 yen works out to be that much in pounds, and this is how much I received for selling one in the money call. So 40,600 yen works out to be 273.78. That's my net credit, and I have already received that. As you can see, it has already been credited to my account. So cash balance as of right now is actually that much. But the account value, of course, is going to be fluctuating until the trade finishes. So this has been a quick update on my Euro Japanese yen short trade using options. I am planning to make more and more trades using options as I see fit. I still have to decide in each scenario whether or not it's appropriate to use option, or would it be better to use a conventional forex trade. With options trading, volatility plays a huge factor, as well as getting the right expiration and the strike prices. And I'm still very new to this. I am learning. All of my learning sources are from stocks trading, and none of them are trading forex directly using options. So I am having to make this connection myself, translating from what it means for stocks into forex. This has been my update on this Euro Japanese yen bear call spread. I'll give you another update at expiration to see how the position go. So I'll catch you by then.